Warning, this is all financial advice. You can invest in any way that will make you feel comfortable. This is just a full breakdown of the stock to help you invest into a company that will help you grow your portfolio for the long term. Thank you.
It's time to hone your skills. You'll certainly need it.
How you doing, people? My name is Kool-Aid Man 100X. Welcome to Black Money. How you guys doing? So, black people, listen, we're going to be reviewing Toyota Motor Company. So, yeah, all the people that got Toyotas, let's look under the hood and see what's really available to invest in. So, black people, listen, first thing we're going to be looking at is, does this company pay dividends? So, we definitely going to look at that first before we hit the chart. So, the first thing we're going to do is see if this company pays dividends too as well. So as you see here, this company does pay a dividend. They pay a semi-annual dividend to shareholders, which the annual dividend is around $5.35. Interesting, but cool. So they pay a semi-annual. So what they do is they pay like twice a year at most, like twice a year. So the average is about $1 and $2. So yeah, if you want to invest into this company, totally up to you. But their last dividend day was March 31st, 2026. The annual is $5.35. The payout is 28.81%. Growth -86, which is not good. So we don't want anything in the negatives when it comes to dividends and companies that we invest in. Of course, you're getting something out of it, but you only get it twice a year. So that's pretty not good as well. Once you think about it. So the share, we're going to be looking at the charts. The share is 176.22, which is crazy, by the way. Never understand that type of thing too as well. So what we're going to be doing here is looking at the chart situation. So we always look at the 6 months to 1 year to 5 year max. So we can see here it took a big dip, as you can see. So it's jumping in the 170s. I would say the 166. The lowest is, think about 166. I think that's the lowest. So they stand around like 160, 170. I would say 160 to 180 at most, because their big hit was like the 166. So if we take a look at that in a year, so they're actually trending up, which Toyota have been doing pretty good. Actually, they peak was at 248, so decent, but they took a big hit after a while, which is crazy. I don't understand that, but 5 years max, they ain't been doing pretty good. So we can see here they big lows back in 2022, which was 130. Ooh, even probably lower 130, 133, which is crazy, by the way, when you look back at these companies back then, which is crazy. So when you look at the max, you can imagine buying Toyota when it was $19 in 1986. You see where it comes right now. Really ain't make a difference, but yeah, if you was born in 1996, Toyota will make you bank. As we look at the charts, we're seeing Toyota is really not that good with a 176.22 share price, which is crazy, by the way. Are we understanding here that this company is steadily declining, but somewhat still there? I would concern with that being. So you already know the motto. We always look at the charts. Next, we're going to be looking at this cash flow. So I'm going to go to the financials and the cash flow. And then we're going to go to my favorite, which is the balance sheets. So as we see here, the net income is around $817.21 billion, which is cool, which is crazy though, because it was in the trillions in December 2023. So how they took a big dip from billions from trillions. With that 2026 volume of Toyota really not doing anything inventive. So the net income is cool. But as you see here, the cash of operations is $1.7 trillion. So this is lower than what they run in the operation for. So you know what that means. Some they owe, some finance, or they in debt, or they ain't got no investments. Let's go deeper, guys. The cash of operation is pretty much it. Change in inventory, negative $468 billion. So see how this went right here. This is part one of the net is not matching. That's not making any sense too as well. Let's look at cash from financing. All right, negative 803 billion, 400, still back in the negatives. and they low on 138 billion. Not good at all, as you see in this financial thing. Not good. So we can definitely see this company is taking a big hit in the long run. So we can see that financing is killing them right now. They're trying to work their way out to financing. So that's a big problem too as well. Let's see the cash you got going. They're in the negative. They're in the negative. They're in the negative. They're in the positive. 12.44 trillion is their cash flow, but their unlevered cash is 12.44. So you mean to tell me you don't have no cash flow and nothing to leverage within your cash flow that you paid? And you can see they try to repurpose their stock, but they had to sell it. So this is another thing too. When you invest into your own company, like I said, your own company, you don't have no stocks in it. That's not good. And the negatives off the dividends off their own company. Yo, what's up, guys? This your boy Kool-Aid Man 100X. I want you to hit the link in the description below for my zero investment books. We have a quick sale going on for $7. Link will be in the description below or in the comments below as well, so you can get a chance to get the $7 deal and other things that you want to learn how to invest and take your investing to the next level. So I hope y'all enjoy. I'm gonna catch you guys there. That's not good. And the total short-term debt is 435 billion, just to give you guys a different outlook on why this company is pretty not good to invest in long term. So my favorite thing is to go to the balance sheet. This is where you get the nuts and the bolts on how the company is actually ran. So let's jump into it. We're going to look into the inventory. The inventory, they got pretty good inventory, 5.13 trillion, which I'm understanding why. Why do y'all have 5.13 trillion in dividends? I mean, not dividends, inventory. It means y'all not selling no cars. So y'all back stock on stuff. If not, people are repoing cars or even returning the cars and getting something better. So we figure out all their money is sitting there in the lot. So that's another big hit they took. They got 5.13 trillion, which in inventory, which is Toyota cars sitting there. Yeah, that's not good at all. Okay, we're gonna give you a little bit intangible there once you start to think about the expenses. Don't want to show the prepaid expenses, but the total accrued expenses, 2.5 trillion, 1.86, 1.98, 2.11. This company is going to fold within the next 10, 20 years. They got too much. They're getting in expenses. How are y'all getting so much expenses off a car company? It's a car company. Why are y'all expenses so high? This is accrued expenses. So some of these cars are not either being manufactured correctly or just in plain sight. They're either returning them or they're just not selling. That's not good. So you have inventory sitting there just accruing expenses on what you spent on creating a car in general, which is not good, by the way, at all. So gotta take that into account too as well. Sorry. But yeah, long-term assets. They got assets within the company because y'all inventory is y'all asset. That pretty much breaks that down easily. Your total assets, same question. You got 9.3, which is your inventory, 1.5. Yeah, they're investing out. They're outsourcing other people with Toyota, not, Toyota parts, Toyota cars, Toyota tires. They got assets with that because their creation of the car is the asset. So it's not, Toyota just selling cars. Toyota actually sell parts and other things too as well to manufacture their own cars, so they don't have to outsource anything. So their asset is their car. So you have to take that into account too as well. So yeah, you can see the short-term borrowing. Oh my God, 538 billion this year. Y'all are borrowing money, long-term debt. Y'all in the trillions. Oh my God, look at this. You're in 1.72 trillion. You're trying to come out of debt with the long-term debt, but that's not happening no soon. You're just getting out the 20s and ain't no telling what's going to occur for long-time leases. Still got to pay the leases at the places that you got these cars inventory at. The total liabilities is in the trillions. The common equity is not even matching what you're making. The retaining earnings, you're still in the trillions, I would say. your treasury stock in the negatives. I figured that y'all don't have nothing to actually have the equity to make, which is the equity that you see here, 41,000. Your total equity, your price to book, decent, and your return on assets only 3 to 2%. Your lowest is 138. Your return in capital is only 2 to 3%. God, dog, Toyota. Ooh, man, and the additional pay to the capital is in the billions. Oh my God, your maturity interest is, God, dude, you're in the trillions with your interest. Toyota is not a good company to invest in, I would say. If you really want to take it into account what you're investing into it, yeah, you might see the green now, but yeah, you might want to pay attention to the red. Just saying, just my advice with this, because it's not seeming endurable to run this company solely. So totally up to you if you feel as though this company is for you. I understand. All right, let's look into the bullish view and the bearish view, because a lot of people is not paying attention to that, as well as the key issues going on with this company. So let's look at the bearish view. Toyota recent earnings has consistently beaten the expectation of the Q3 2026, which is $4, surpassing the 3-point estimate, and the exact conciseness of the estimate project for the full year, which I can see being good, I guess. Earning $20.98 per share, reflecting the 6.99% change year over year, and the stock trades at a significant discount to the industry forward PE 809 versus the industry at an average of 10. So yeah, the only reason the stock is high is because people are trading it. It's not high off of growth or profit. It's literally staying afloat because people are trading the company. They're trading. That's sad. Despite the occasional earnings, yeah, this is where I like reading the bearish view. Despite the occasional earnings beats, the exact consensus, the EPS estimate at a revised 3.65, lower within the past month. Earning total exact ranking of 4 to sell. Yeah, of course, people are selling it. They're getting rid of it because they see them behind the hood. And this is not a good company to invest in long term, or if not, buy from them as a car company. So I had to take that into account too as well. So earning the prospect of combining with the decline profit in margin, decline profit in margin, the negative cash flow reporting for the 2025 raises seriously concerned about the near term profitability. Profit, keyword, profit. They ain't making no money. I just said that. Did I not just say that 5-10 minutes ago? The amount of debt and the amount of assets they don't have and the amount of net worth that they don't have, as a collective company, there's no way this share price should be where it's at. The only reason this share price is where it's at is because it's trading in volume. Look at volume. 1 point, 2 point. They're trading. They're not investing. Take that to do what you will. So we're going to be looking at the analysis of the consensus, which is going to give you a mandatory of what people buy, keep, low, whatever, stuff like that. So when you're looking at the market cap of this, people represent to sell, but I want to say is that to be a concise thing, but people would actually buy Toyota, which is, I would say, okay, I guess, but if you're looking at it from a standpoint, no. The reason why I break out the calculator is we're going to see how much to where I will go a concise amount of shares to buy and see how much you have to pay for these amount of shares, if not investing into the company or not. So we already seen the actual amount of money that you put into the company solely. We want to see how much it will buy to actually make it a significant amount of, shares to collect. So I always stay around between 20, 50, or 100. So I really give you 50 shares, then I'll really give you, 20, 50, 100. So basically you get the same gist. So what I do is, you do this, time the company that you were. So we're going to start off with 10 shares. So you timed out on how many shares you want to buy. Very simple math. It's easy. So we put 176.22 and we times that by 10 shares. So we want to buy 10 shares. So this is an amount you have to put in. So you got to put $1,762. Cool, right? Like, all right, Kool-Aid, I can rock with that. No, it's really getting worse from there. So, when you seeing that number for the 10 shares, it seems doable. It seems correct. So let's try 20 shares and see what they get us. You got to pay $3,524. Crazy, right? Yeah. So let's even take it even further. Let's go 50 shares. 50 shares. That takes us to, oh, no, I put it in wrong. I'm sorry, I put that. So it's 176, 22 times 50 shares. And that equals $8,811. And I can imagine what 100 shares would be like. So 176, 22 times 100 shares, which would be 17,622. And don't give this a good thing, because remember, they only pay you dividends, simultaneously. So as we see here, we go to the dividends with Toyota. I think the last one was 276. So just throw that out there for if you want to do math. So we take 2.79. So 79 cents, 2.79 times 10 equals $27. That's how much you're going to be making 2 times a year. Crazy, right? I'm just giving you numbers. That's pretty much it. If you want to buy Toyota, totally up to you. I just gave you the basic breakdown and facts of the company itself, so you'll definitely know what you're doing and investing in. But I do recommend buying this company within index funds or ETFs, or if not, if it's available for weekly pay. So you do have stocks that's available for weekly pay, and that's how I pretty much invest my money into this company. So that way I know if it's going bad, I can get out. I know I can make money every time, and I know I can be safe investing into this company unless it drop in the red like it does now within 5 years. So I'm just here to give you advice. I hope you enjoy. Thank you guys for coming. I'm gonna catch you guys on the next video.